Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A possible inverted hammer yesterday as the market still hangs around the April 2020 low at 107.25. The market is still travelling along the late November 2022 to early January bullish shift pitchfork, highlighted in dark blue in between the lower time, currently 106.48, and the middle time, currently 108.32. In between where the market is and the lower time is a significant rising short-medium moving average, currently 106.79. This is the support that put an end to the decline from the middle of last week until this past Tuesday, which had led to last week's weekly key reversal down. Between the market and the middle time above, we have the May 2020 low at 107.66, which has been a passable top over the last two sessions. Now, so far today, a pullback up over the April 2020 low and testing the May 2020 low above. Cable, aka sterling against the US dollar. A second bullish white soldier yesterday with a close right on the May 2020 low at 120.73. This was a continuation from the previous session's combined bullish double and outside day, which in turn was caused by the market dropping down and rejecting a slowly, very slowly declining long moving average below, currently at 119.41. Above, we now have the congestion at 121.5 and the flatlining short medium moving average, currently 121.79. I've kept in the daily chart for now the two broken bullish pitchforks, the Andrews and the shift for the early November last year to early January move. Now the reason why is not that they may be repaired, I don't think that's going to happen, but they have the time crossovers in the middle of next week and late the week after, and I want to see what happens. I'll also retire target X3 at 128 even, the secondary harder to reach target for the late September to late November 2022 ascending wedge pattern. It is no longer a valid target. It seems the market was happy in just achieving the primary target some while ago. What we do have is an interesting build-up of a late November last year to date double top, Adam and Eve type. We are in the final construction of the second top, and it'll be interesting to see what happens now on this construction. So far today, a move up over the May 2020 low and a look at the congestion in the 121.50 area, but no more than just a look at the moment. Euro sterling. A bearish closing black Mariposa yesterday and also a third bearish black crow as well. The market is now coming back down to the combined congestion of the 50% Fibonacci line of the March 2020 to March 22 move at 88.51 and the lower time, currently at 88.39, of the fairly new but still tested late November last year to mid-January bullish Andrews pitchfork. Further down we have the rising short medium moving average, currently 87.67, and the unsure medium moving average, currently 87.46. All this is in the shadow of last month's monthly key reversal up. Now so far today, further move lower and closer to the 50% Fibonacci line and the lower time, but no more than that. US dollar Indian rupee. An interesting pattern yesterday. It was almost a hammer pattern, except the previous session was a bullish white soldier instead of a bearish black crow. But it was most definitely day two in a two-day bearish separating lines pattern. This, as the market came off from the recent highs, prompted by the upper time, highlighted in dark green, of the October last year to early January bearish, but very shallow, bearish shift pitchfork. A little lower down we have the compact combined support of the rising short medium moving average, currently at 82.11, and the rising medium moving average, currently 82.03. I'd previously highlighted the action since September 22 to mid-January as possibly forming a large double top, Adam and Eve type. This is not the case anymore, as such a pattern does not work here. However, the more recent inverted roof pattern, which I highlighted in purple on my daily chart, has worked, if a little lopsided. So far today, we're a limited move lower, as in lower from the open, but still within yesterday's range. US dollar against the Brazilian real. An indecisive spinning top yesterday, though with a new high for the last week or so. The cap on the market was the flatlining medium moving average, currently at 524.37, just under the broken and seemingly since repaired upper time, currently at 525.92 of the July to late September 2022 shallowly bearish shift pitchfork. To be honest, there is a hell of a mess of resistances up at these levels that have eroded and capped the market. These include, but are not exclusive to, the 50% Fibonacci line of the March 2021 to May 22 move at 522.76, the declining short medium moving average currently 521.47, the 50% Fibonacci line of the May 2020 to April 22 move at 527.37, and finally, the long moving average currently at 519.36. The well-bashed July to late September 2022 bearish shift pitchfork, highlighted in dark blue on my daily chart, is still the key pattern here, despite earlier onslaughts. Further down we have a relatively free zone, down to the interesting 38.2% Fibonacci line of the June 2019 to May 2020 move at 510.87. However, the last few times we have seen the market try down below this Fibonacci line, we've seen support emerge at 503.33, 501.80 and 500.73, so caution. Over all of this is the monthly key reversal down we saw in January. US dollar against the Mexican peso. A reactionary bullish harami yesterday as the market pulled up from a combination of the congestion at 1885.40 and the middle time, which is highlighted in red, bright red, of the late September to early December last year bearish shift pitchfork, currently at 1886.52. Of all things, the rising short moving average, currently at 1882.79, provided the base of yesterday's action. Overall, the market is traveling down two bearish pitchforks. The larger and older March to July bearish shift pitchfork from last year, highlighted in dark blue on my daily chart, with the market sitting between the lower time below, currently at 1858.52, and the middle time above, currently 1948 even, and the more recent late September to early December last year bearish shift pitchfork, with the market currently embracing the middle time. That is highlighted in bright red, as I say, on my daily chart, and that's currently 1886.52. Now, throw further into the mix, we have the neckline, currently 1865.98 of the old January to May 2021 head and shoulders top. And you have stratified support below, stretching down to the 1850s. Meanwhile, on top, we have, some way on top, the March 2020 low at 1815.03, and perhaps the more important declining short medium moving average, currently 1921.30, that capped the market earlier this week. So far today, well, an attempt lower, but prices ran into the earlier highlighted congestion below, especially the short moving average as a base again, and reverted back upwards, though still within yesterday's range.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.